Hello everyone. In business writings and speaking, often such words are used which are not often covered by the standard English. These words and phrases have acquired a status of office jargon in the business world. I am Anubha Walia, director in a leading training and executive coaching firm, Prism Philosophy at New Delhi. I want to talk to you today about one of the most important aspects on the communication, that is business terms. In this era of information technology, many new words and phrases have been added to this list, and it is expected that while working in business environment, one should be familiar with this terminology and try to use the same in the right perspective. In recent years, the words such as digital India and demonetization have become in the Indian context. In this age of entrepreneurship and startups, the word incubation are acquired much importance. So let's learn and understand these words. What we are going to cover today is, after in this session, you should be able to state the meaning of acquisition and affiliate marketing. You will also be able to explain what is meant by balance sheet and brand and business plans. You'll be able to describe the objectives of Digital India. Explain the differences between economic growth and economic development. Describe the meaning of globalization. You would be also able to state the importance of human resource and explain the meaning of incubation. So let's start. Although there is a long list of words that are commonly used in the business world, a few selected words, phrases are given here along with the context when they are used and when not to use. And I am going to help you out in this to learn and apply. I am going to use the words alphabetically. So let's start with the first word, accounts. A very common term. A term accounts has many connotations depending on the context. In business, it refers to a record keeping or ledger activity. It has many different applications in the financial industry. In banking, an account refers to an arrangement of a customer's financial assets and holds them on behalf of the customer at his or her discretion. There is also a very important aspect that we cover in the business organization related to account, which refers to a statement summarizing the record of transaction in the form of credits, debits, accruals and adjustments that have occurred and have an effect on the assets, equity, liability or past, present or future revenue. It can also refer to a brokerage account which holds customer assets at a licensed brokerage firm. In type of accounts, an investor deposits money or other assets and the broker places trades on behalf of the client. Businesses are obligated to produce an annual set of accounts. If they are listed on the stock exchange, they must also show half-year profits, which we say information regarding profits 6 months into the financial year. Let's go to the second word, accounts payable. When a business enterprise purchases goods on credit which needs to be paid back in a short period of time, it is known as accounts payable. It is treated as liability and comes under the head current liabilities. Accounts payable is a short-term debt payment which needs to be paid to avoid default. The third word, accounts receivable. This is just opposite of accounts payable. Accounts receivable is any money the customer owes to a business enterprise for the goods or service they purchased from the market. And you will also see this money is typically collected after a few weeks and is recorded as an assets on the company's balance sheet. Annual equal rate, which we also represent AER, a quote of what interest paid on savings and investments would be. It is calculated by adding each interest payment on the original deposit, then working out the next interest payment compounding the interest. There is another word called APR, which is annual percentage rate. So, an annual percentage rate is the interest rate the borrower has to pay to the lender, such as the bank or the financial institution. APR is also the annual of the interest paid on the investments without accounting for the compounding of interest within that year. Acquisition. When a company purchases most of all, or we call it all of the another company's share to gain control of the latter, it is termed as acquisition. Although merger and acquisition of large companies is heard often as it make news, in reality mergers and acquisition occurs more regularly between small to medium sized firms and then between large organizations. You must have observed recently Reliance Industries Limited acquired Future Group retail business. So this is what is basically acquisition. Let's understand the word affiliation. Affiliated marketing. Affiliated marketing is a business strategy to increase sales. In this strategy, a company allows to advertise its products by websites which are often frequented by the same customers known as affiliates. In lieu of the order received through the websites, the online advertisers receives commission from the company. These days, various channels such as YouTube does affiliate marketing. Let's start with the alphabet B. Balance sheet. A balance sheet of a company is a financial statement that includes assets, liabilities, equity capital, total debt, and so on. At a point of time, usually at the end of the financial year, we do this. In the balance sheet, assets are given on one side, which we say left side, and liabilities on the other side, we say it right side. It reflects the true picture of the financial status of the company, and both heads, assets and liability, should tally. That is why it says assets equal to liabilities plus equity. Now let's understand and give you an aspect of typical example of assets. Some of the examples of assets, I will start with intangible assets. Now, intangible assets are those assets which are kind of franchises, agreements, copyrights, patents. There are some set rules to evaluate these types of assets. Whereas liabilities are the funds that the company owes to different agencies. Liabilities are of again two types: current and long-term liabilities. Current liabilities are those which are due within 1 year and includes like wages, pension plan contribution, medical plan contribution, utilities, building and equipment rents, payments to vendors, we also call it supplier invoices, income tax deduction, sales tax on goods and services charged on purchase, interest, maturity debt, and so on. When I talk about long-term liabilities, it includes payments to be made after 1 year. These includes long-term debt such as interest and principal on bonds, any pension funds liabilities, deferred tax liabilities. Equity and earnings. Equity is also known as shareholders' equity. These are funds available after subtracting liabilities from assets. Retained earnings are earnings which are retained by the organization that is not paid to the shareholders as dividend. Retained earnings are used to work and run the organization. Let's understand. You will see retained earning how are used for reinvestment in the company's balance sheet. So balance sheet of a company is a financial statement. As I mentioned, it includes assets, liabilities, equity capital, total capital, debts and so on. Let's understand now furthermore and go deep dive and figure it out. That are some of the examples which I touched upon intangible assets, and also now focus on how these are some set rules to evaluate these type of assets. We talked about the liabilities too in this, and we also now figure it out how these liabilities, which are of two types, current and long term liabilities, gets used. As I mentioned earlier, the current liabilities are those which are due within 1 year, and when we talk about long term liabilities, which are to be made after a year. So now let's understand the detail of the brand, right? Brand is something which is really important for an organization when we talk about into the usage of retained earning. Okay. Now, when we say that there is a total liabilities, the owner's equity, the common stock and the retained earnings, these gets included in this. Now, the brand is the identity and it actually works into the space of forms which includes name, sign, symbol, color. Just to give an example of a brand, Dalda. It became so popular that all solid fats prepared from the vegetable oils were called Dalda. And some other examples of brands are Airtel, Jio, Revlon, Monte Carlo, Parker, Colgate. A legally protected brand name is called trademark. A brand associated with a product or service has a certain qualities or characteristics that makes it special or unique. A brand is therefore one of the most valuable element in an advertising theme, as it is considered to be associated with certain qualities. A brand which is widely known in the marketplace acquires the status of brand recognition. When brand recognition builds up to a point where a brand enjoys a critical mass of positive sentiments in the marketplace, it is said to have achieved brand franchisee. As a brand is associated with certain attractive quality or characteristics, branded products or services common and commands higher price than the other similar unbranded products or services. A global brand is one which is perceived to reflect the same set of values around the world. Some global brands which includes Apple, Coca-Cola, McDonald's, MasterCard, Sony, Visa. These are some examples which I just related are a global brands which are used to sell the products globally. On the other hand, we have local brands which is one sold and marketed in a relatively small and restrictive geographical area. Examples of the local brands in India are like Nandini brand milk in Karnataka, Arey milk in Maharashtra, Saras milk in Rajasthan. Let's move to the word business plan. A business plan is a written document, a document that outlines the goal of the company for the next 4 to 5 years and the strategies to be adopted for achieving these goals. It is based on the service or business. A brand can make many combinations of slogans. For example, in 1960, target market, possible clientele, selling points, economic conditions, etc. were there. Business plans may also include SWOT, what we name it as strength, weakness, opportunities or threats. So business plans are necessary for seeking loans from banks and other funding agencies and for attracting potential investors. The company may revisit its business plan periodically to assess its achievements and failures and if necessary to adopt new strategies and direction. Although business plan is a must for a startup, and established business enterprises also needs to remain goal oriented. Although it is maybe good to incorporate as much detail as we can think of. And you will see the details are helpful because it is better to keep it concise for a quick reference. The key element of a business plan, some of the common points in the business plans are like executive summary. It includes a brief statement about the mission of the company, its location, operations and leadership. The second element in this is products and services. In this particular section, the details of the product and services to be offered by the company are given. It may include scale of productions, manufacturing technology, pricing and lifespan of the products and special offers if any. Financial planning. In this section, the company's plan to raise capital from different sources are given. It includes financial statements, balance sheets and other financial information for already established enterprises. New enterprises give details of the targets, source and investors. There is also a market analysis. This section incorporates details of the target markets and other competitive products already in the market. We shall not miss the marketing strategy. Now, in relation to the marketing analysis, what strategies company will adopt to be successful in competition to the other products are detailed in this section. The pricing and the special offers to attract the customers are actually discussed in this particular section. We also have budget in the business plan. It takes into account different costs and related to the development. And you will also see that staffing, manufacturing, publicity and marketing aspect is there. So you will see the business plan of a company is a written document outlining its goals and strategies. It also outlines its long-term and short-term plans of business. Includes executive summary, details of the products and services and financial planning, marketing analysis, market strategy and budget. Let's explore capital. Capital is a critical component for running a business and for financing its future growth. It is derived from the business operations or be raised from debt or equity financing. In a broader sense, capital is anything that confers value or benefits to its owner, such as factory and its machinery, intellectual properties like patents or the financial assets of a business or an individual. While money itself may be constructed as capital, it is more often associated with cash that is being put to work for productive or investment purpose. When budgeting are focused, businesses of all kinds typically focuses on three types of capital: working capital, equity capital and debt capital. A business in the financial industry identifies trading capital as a fourth component. Let's explore the word demonetization. Demonetization can be defined as the act of stripping a currency unit of its status as legal tender. The prevailing form or forms of money is pulled out from circulation and is replaced with new notes or coins. Sometimes a country completely replaces the old currency with new currency, and you all must have witnessed it in 20. For example, the euros came into the existence on Jan 1st, 1999, when all European states except UK and Denmark agreed to it. Initially, the currency was launched virtually in 1999 and in 2002. Notes and coins began to circulate. It rapidly took over from the former national currencies and slowly expanded behind the rest of the European Union. The Government of India announced the demonetization of all 500,000 banknotes on the 8th November 2016, which was issued a new currency of 502,000 banknotes in exchange of the demonetized banknotes. There's another common word, let's explore that, which is Digital India. Digital India is a flagship word, and it's a flagship program too of the Government of India with a vision to transform India into digitally empowered society and knowledge economy. The objective of the Digital India is this group is to come out with the innovative ideas and practical solution to transform our nation into a thriving economy to create opportunities for all citizens by harnessing digital technologies. It endeavors to empower every citizen with access to digital services, knowledge and information. This group will come up with policies and best practices from around the world to make this vision of a digital India a reality. Disinvestment. Disinvestment may be defined as the action of an organization or government selling or liquidating an assets or subsidiary. If the sale of the asset is not included, disinvestment refers to capital expenditure, which we also call capex reduction, which leads to reallocation of resources to more productive area within an organization or government funded projects. So the Government of India set up a Department of Disinvestment in December 1999 and was later named as Ministry of Disinvestment from the September 2001. From May 2004, the Department of Disinvestment became one of the department under Ministry of Finance. Every year, the Finance Minister sets a set of objectives and they set a target of disinvestment in his or her budget speech. However, the target of disinvestment could not be achieved in any financial year due to many reasons, such as offers made by the government were not being attractive, unrealistic valuation process, strong opposition from the employees and the trade unions. Some of the companies which witnessed a strategic sale, which included Bharat Aluminium Company Limited, CMC Limited, Hindustan Zinc Limited, Hotel Corporation of India Limited, which had 3 properties, Centaur Hotel, Juhu Beach and Centaur Hotel Airport, Mumbai, Indo Hotel, Rajgir and so on. HTL Limited was another one, IBP Company Limited, ITDC, which had 18 hotel properties, Indian Petrochemicals Corporation Limited, GSOP and Company Limited, Lagan Jute Machinery Company, Maruti Suzuki India Limited, Modern Food Industries India Limited, Paradeep Phosphate Limited, Tata Communication Limited and so on. So you will see the Finance Minister in her budget currently, presentation was made set a disinvestment target of rupees 1.75 lakhs crore for 2021-22 budget. And the target receipt of disinvestment by the Government of India from the 2010 to 11 to 2019-2020. Let's understand economic development. Economic development, as defined by Wikipedia, is the process by which a nation improves the economic, political, and social well-being of its people. It is often confused with economic growth. Both are different. Economic growth is the positive change in the real output of the country in a particular span of time. It is measurable quantity in the term, and you will see that when I say a pure number of game is also there. So as I emphasize that it is a measurable quantity in terms of actual economic output, things like GDP, which we call gross domestic product, is there, a pure number game. But economic development much broader connotation, such as social welfare, childhood education, healthcare, or in a nutshell, the overall standard of living. Economic reforms. The economic reforms became popular in 1991 when the Narasimha Rao government in India introduced fundamental changes in the Indian economy by liberalizing its, resulting in faster rate of economic growth. It also included a very important aspect of technology upgradation, industrial licensing, removal of restriction on the private sector, foreign investment, and foreign trade. This term was used as the end of the license Raj. The reform intended at bringing a larger cooperation of the private sector in the growth method of the Indian economy. The essential features of the economic reforms are liberalization, privatization, and globalization, commonly known as LPG. Since then, the process of economic growth continues. Employee empowerment. Employee empowerment is a management strategy to motivate the employees by allowing them to make independent decisions and act on them. According to Newstrom and Davis in 1986, the empowerment is any process that provides greater authority through the sharing of relevant information and the provisions of the control over factors and effective job performance. Empowerment includes giving employees a voice of regular soliciting and acting on their feedback, giving additional responsibility or even an entirely new role, or sometimes increasing their engagement. So let's take up another word called employee engagement. It is closely related to the employee empowerment. Employee engagement has or may be defined as the emotional connection of the employees towards the work they do, their teams, and their organization. Employee who feels connected to their organizations work harder, stay longer and motivated, and others to do the same. A study has also showed that 92% of the business executives believes that engaged employees performance better, boosting the success of their teams and the outcomes of the organization. There is a word feedback, which is another jargon which commonly used in the business term. Feedback is the process of sending the report about the effect of any action taken in the context of various activities of an organization. So thus feedback can be defined as the return of information provided following an activity or the process. To give you an example, if a company launches a new product, the marketing personnel will assess the response of the customer and its performance vis-a-vis similar products already present in the market and will send their feedback to the management. Thus, feedback, you will see, has a two-way process. It is an integral part of the business enterprise. Feedback may be positive or a constructive. The positive feedback is a praise and is used as a motivation. If someone has done a good work, the manager can tell him about the positive feedback. Whereas the constructive feedback, on the other hand, may have criticism for their present approach, but at the same time may give a suggestion how to improve or correct it. So constructive feedback helps the person follow a better approach. It is also known as formative feedback, development feedback, or redirection. Let's understand the word finance. Finance can be defined as the management of money. The activities such as saving, investing, borrowing, lending, budgeting, forecasting, etc. are some of the common words used in finance. They are the three main sources of finance: personal, corporate, and public government. Let's try and understand forecast. All the words which we have read about are the common words. All are familiar, the word forecast, with the weather, which predicts the possible weather in the coming days. In the business world, the business forecast is equally or rather more important, which predicts the likely scenario of the sales or other aspect in a particular field of the business. The Leo Barnes remarked business forecasting in the calculation of reasonable probabilities about the future based on the analysis of the latest relevant information by the tested and logically sound statistical economic techniques as interpreted, modified and applied in terms of executive personal judgment and social knowledge of his own business or his own industry or trade. There can be a business forecasting which is used for long-term planning, budget making, inventory planning, marketing and so on. There are two different types of business forecasting techniques which is used, that is qualitative and quantitative forecasting. Globalization. The growing interdependence of the different countries, economies and other aspects brought about a cross-border trade. And this aspect of cross-border trade, when we say, which means we are actually using the goods across the border and either the technology or the flow of investment. That's how the term became globalized. You will see the various tremendous advancement has made in the field of IT and has been the most important contributor to the process of globalization. The CEOs of the multinational companies can actually video chat with their employees world over. So now the firm is in the developed countries establish their manufacturing unit in the developing countries to save labor and logistics cost. The key pointers in the globalization are like a company can sell its products, technology and services across the nations. They can actually, corporate companies can attract investment from individual and institution from across the globe. Jobs can be created, globalization can push up to the tourism, and because of the globalization, an economic downturn in a country can be felt across the world. And you will also witness that globalization is responsible for the COVID-19 pandemic too. GDP, which we also call it as gross domestic product. It is nothing but a final value of the goods and services produced within the geographical boundaries of a country during a specific period of a time, normally a year. A GDP growth rate is an important indicator of the economic performance of a country. In India, contribution to GDP is mainly divided in three broad categories: agriculture and allied services, industry and service sector. The GDP growth rate of India from 2018 to 2021 can be witnessed in our various sections. Human resource, a department of the company that deals with the matter relating to its employees. The term human resource was first coined in 1960s when the importance of labor in an organization and matters related to the selection, training, welfare and motivation was realized. You will see that human resource deals with not only welfare and benefit but also recruitment, training, management relation and development of an organization. Let's try and understand the word incubation. According to the UK Business Incubation, which we call it as UKBI, it is a unique and highly flexible combination of business development process and infrastructure of the people, which is designed to nurture and grow new and small business by supporting them through early stage of developmental and the changes. you will see that a business incubator, which we also say incubator, the main goal is to produce a successful firms that will leave the program financially viable and freestanding. These incubators, graduates have the potential to create jobs, revitalize the neighborhoods, and commercialize new technologies and strengthen the local and national economies. So, in the business writing, speaking, often such words are used that do not find place in standard English. These words have acquired the status of office jargon in the business world. So keep applying them and keep learning them and keep using them. With that note, happy learning. Thank you so much.